Welcome to our weekly Forex and Futures Market Forecast. My name is Jay Norris, and I teach trading at Trading University. As always, we need to remind you that trading involves risk of loss and is not suitable for everybody. Before we get to the charts, some words of wisdom from Warren Buffett, which absolutely is apropos to how we approach the markets as well. Our approach is very much profiting from lack of change rather than from change, and we absolutely have to agree with Mr. Buffett on that. Essentially, the chart we look at, here's the Australian dollar chart, we'll start out with that, is absolutely a reflection of those underlying fundamentals that are influencing that market. So what we do is we identify those patterns in the market that demographics, government policy, certainly economics have created, and then we position ourselves to take advantage of those patterns. Australian US dollar, there's the daily chart. Very flat correction here. We talked about this in weeks past too, the possibility that the dollar rally we've seen doesn't necessarily have to have a steep, violent correction. It can have a more tame, flat correction, and you see that in this chart as well. Australian dollar very weak. You can't even get out a minimum of a upside correction here. So very flat correction here, and we see that as longer term bearish. Let's pop out to our monthly chart where you get scale here, and that's our overall downside target here. Just below 80 even, we think that market's going to get there, and we certainly think it has the momentum currently to do just that. And this flat, this very weak correction here that you're seeing, it's just reinforcing this current bearish pattern. Next market, the dollar Swiss, and here we see it again, another correction in the market. You had that drawn out sustained bullish move in sympathy with the strong dollar, and then you started to get a bit of a violent, more volatile correction, which is what currencies and commodities are known for. But you didn't get any follow through here. You had that big red down bar. That was the slower than expected US retail sales number, but since then, the market's been back on the upswing. So again, it's a case where the markets are telling us, hey, look for a more flatter correction. Look for more of a sideways correction in this market than a steeper correction. So that's what we're looking at currently right now. We still think there's plenty of room on the upside, but the markets need a pause, and that's a healthy scenario. Back out, pan all the way out to a monthly chart. We think there's plenty of room up above. In the dollar Swiss, we think par it'd be more of an intermediate term target for us. That'd probably make more sense. The market will take a break there, take a pause from this big rally. Next market, the euro. Euro finding support here. You know, you can't rule out a little bit more upside in this market because it is stabilizing there at a fairly predictable level for us. That's our RTT level. That's a risk tolerance threshold level. On the other hand, you still have momentum to the downside here. There's very little news out in this coming week that we think could surprise the market. If anything, you've got the Fed out later in the week. That we see as definitely a bullish for the US dollar, i.e. bearish for the euro. You have some economic numbers early in the week for the euro. The biggest number we see early in the week is that US consumer confidence number. As is so often the case, we see U.S. consumer confidence is a boost for the dollar, is a boost for the U.S. economy. U.S. consumers amazingly optimistic, and they'll probably continue to be so given the boost they're getting every time they have to fill up their gas tank. Oil prices have come down significantly. Oil prices they closed below 90 just a couple weeks ago. We pointed that out, and bam, they went right to 80. So big sell-off there, and the U.S. consumers definitely benefiting from that. You think about that, that's like a tax break. Disposable income catching a boost there. We think that'll definitely be something that will continue to add to the dollar strength. We think that will definitely support the strong dollar theme that has been in place since the spring and will very likely continue to be in place potentially years to come. Realistically, let's look at a monthly euro chart here. We have to go out to the futures really to get scale here. The euro's come a long way since its inception. I remember when the euro was trading in the 80 handle. Now you're all the way up here at 126. So we think there's plenty of room down below. We think with the current momentum down here in the current economics in Europe that 120 is essentially a chip shot, really, and we think once that falls, then 110 could come up pretty quickly too. So we feel there's a pretty big hole underneath the euro. Unlike the Aussie, by the way, we're pretty bearish on the Aussie. We think there's downside in the Aussie. However, the Aussie doesn't have nearly the room below it that we feel that the euro does. So from our perspective, this is a pretty bearish picture that the fundamentals have painted, that the European economics have painted. And let's face it, the Europeans, they don't consume like the U.S. does. They'll benefit from lower oil prices, but not to the degree that people in the U.S. will. So we think there's still longer term plenty of room down below in this market. Shorter term, it's really just a matter of this level here, just above 126. If that gives way, then we think you'll see lower lows in a hurry in that market. Again, it's back to what we talked about with the Aussie and the Swiss franc also too, where a dollar correction would be normal, it would be welcome, but it can just as easily take the form of a sideways move rather than a more violent rally here for the euro. We wouldn't have minded seeing a steeper correction, seeing a bigger rally here, because we think it sets us up for nice longer term trades, but the markets are going to do what they're going to do. And the picture we see that, of course, again, is painted by the fundamental brush. It doesn't look good for the euro. We think our analysis all along has been spot on, that you're going to see much lower prices here. Next market, the gold market. There's gold. We were hoping to get a little bit higher. We like to see it. You get in the middle of that zone. You get some kind of a formation, then you can tee off it on the short side. Look, it barely got to the bottom of that zone and turned around. Wouldn't mind seeing it take another run up there and perhaps gives us a double top. We absolutely think that the pattern in the gold market here, you can see it on the weekly, it is an accurate reflection of what's going on fundamentally in the world, in the market. It's just a pattern of lower highs, lower highs, lower highs. So we think this will just prove to be another lower high prior to the market breaking 1200. And here's another market where, boy, there's a lot of room below in this market. I point to gold. People are always asking me about gold. Hey, what about gold? Gold's going to come back. It's like they're warning me about gold. Gold, you can't write off gold. I'm not quite sure what the fundamentals are on that market, other than it's a fear-driven market, and when everything else goes wrong, then gold goes well. But I see a lot going right now in the market. I see lower commodity prices across the board. You had a huge harvest in the U.S., so grain prices are lower. Crude oil prices are lower, so the cost of food is going down. When you hear what the U.S. Fed has to say, and you look at how the markets are behaving, you have to agree with them, and all that points to, from our perspective, to lower gold prices. So we think gold, like the euro, has a big hole underneath it there, and you pull that rug, and we feel there's a lot of room below, and this is a sign of weakness here, that you couldn't even get into that zone. You couldn't even get above 1250 or so. So we're definitely interested in continuing to sell rallies in the gold and hold on to long-term shorts in that market. Let's cover crude oil very quickly, because it is such an influential market. There it is. I mean, you couldn't even get a dead cat bounce out of this market. Speaking of corrections as a way of measuring strength in a market, and that's what we do. Here you didn't even get any kind of a correction. You're still grinding lower. Pan out to a weekly chart. Nothing but momentum. Nothing but bearish momentum. Go all the way out to a monthly chart, and there's kind of our downside range for this market for crude oil. We think that you could see it get into the low 60s handle, and if you look at all the crude oil out there, you can certainly make a case for that. And again, we feel pretty strongly that the chart, that price action itself, what price has done and is doing, is absolutely a reflection of what's going on fundamentally in a market. So when you look back and you see that, yeah, crude oil is familiar with the 60 level as it was in 05 and 07, and then again you broke through it, you overreact to the downside here in the Great Recession of 08, 09. You think, yeah, 60, why not 60? Seems like a reasonable downside target to us. The market's been there before. So, and by the way, that would be great for U.S. consumers to be able to fill up their tanks, and effectively getting a nice tax break, and then it's a lot less money to fill up the tank. So crude oil, Americans are definitely catching a break in that market. Let's go to the last market. We'll take a look at dollar yen. Well, I was hoping dollar yen would have come down one more time to give us a buy signal there, gives the opportunity to get long. Our long-term upside target was 110. It was 108 on the way up, and then we said, well, with the momentum, you'll probably see 110, and you did see that. The market did kiss 110. But then we said we'd be interested again, reached our long-term upside target, go to the sidelines there, and then we were saying, again, this is a nice zone here, but it only tagged it once. We want to see it get in there, give us a little bit of formation, give us a little bit of time to react to it, and it didn't. So again, it's just dollar strength. It's dollar strength, and that's the long-term theme here. So that'll do it. My name's Jay Norris. I teach at Trading University. We'll see you guys next time.